The price of housing is set by the marketplace. The question is whether this amount of money that people pay for the rental value of housing, which is mainly land value, is going to be taxed or is going to be paid out as interest. So people pay the same amount of their income for housing as they would with a higher tax system, but whatever the tax collector relinquishes is available to be paid out as interest to moneylenders, to the banks. And so people, outside buyers, are going to bid against each other to see who gets to buy a house or a commercial office building. And the winner is the person who is willing to pay the entire rental value after taxes to the banker. And the motto among commercial investors like Donald Trump, there are two mottos. The first motto is never use your own money, use other people's money, which means debt pyramid to the highest ratio that you can leverage. The second motto is that rent is for paying interest. A commercial buyer of a property, for instance, and if you understand commercial real estate, you'll understand the housing market much better. For commercial real estate, various bidders will calculate what the maximum rent that can be extracted is, and they will take that rent and they'll talk to the banker and say, I can afford to pay you so much money in interest. And the reason that the absentee owner is willing to pay this money to the banker instead of keep it is that they're after the capital gain. They want to buy a piece of property, let the rent carry the interest charge, carry the loan, and at the end of 3 years or 5 years, they will be able to flip the building to sell at a capital gain. And so the deal is that the banker gets the rental income, the investor, the absentee owner, gets the capital gain, which is really a land value gain, because what grows is not really the building. The building depreciates, or at least is supposed to depreciate. So if you look at the real estate market in America for the last 50 years, since World War II, say, between the end of World War II, 1945, and 2000, the real estate sector didn't pay any income tax at all. They were able to get a tax break of deducting the interest charge as if it were a cost of doing business rather than a financing choice. And they were willing to pretend that the building was depreciating so rapidly that the property they bought was actually losing value, where the reality was that property prices were accelerating steadily, and so the tax system was based on the fiction that property was losing its value, while actually it was increasing in price. And the theory was not only that interest would be tax deductible, not only that depreciation would be deductible, but when finally the property was sold at a capital gain, if the investor then would turn around and buy another property, there was no capital gains tax charge at the point of sale. You were allowed to keep increasing your real estate fortune ad infinitum as long as you kept plowing your gains back into yet more real estate. And so the result was an exponential growth curve, and essentially a growth in debt over a fixed supply of land. So, of course, land prices went up exponentially to reflect the amount of debt that rental value or flow could be capitalized at.